My name is Alexander Kudrin. I'm independent fixed income research analyst. I have more than 20-year background of the investigation and research work with different investment banks. So I'm covering primarily Russia, but also apart from that, CIS region.
I'm Evgeny Gavrilenkov, also have some track record in analyzing transitional economies for the investment banking industry. Also have some academic background, working at a couple of universities. The Russian economy, we cannot say it's in a great shape, but it's very stable, as opposed to maybe conventional views that the low oil price could have affected the economy significantly. It didn't happen. We had a couple of recessions in the past 10 years. One of them was 2008 and 9, which was just in line with the global one. Then we had a smaller recession to 2015 and 16. When the oil price collapsed once again, but that recession was very mild, and since then the economy recovered. It's growing. The growth is not fast, but it's very stable. Russia has no major imbalances, so the current account is in surplus. The budget is in surplus. Total foreign debt is comparable with the international reserves and is something below 30% of GDP, including the ruble part of the debt. So. From this point of view, Russia is stable, and inflation came down much faster than people expected. Inflation hit something like 2.5%, even slightly below. And now it's going up slightly, but again, the medium-term target of 4% of the central bank is likely to be maintained in the foreseeable future, and possibly after some minor spike of inflation, which we expect in the early year, not only us, but the central bank itself, given that the value-added tax is going to be a bit higher starting from next year. It will be a very short-term effect, but then inflation will come down, and we believe that 4% and below, it's the more or less sustainable rate of inflation for Russia. Next year, our forecast doesn't differ much from the official forecasts, around 1.3–1.5% growth. It's not great, but it's stable. When I mentioned that the budget is in a good shape, the budget is in surplus, I think what is worth mentioning is that the dependence of the Russian economy on the oil price significantly decreased. And oil revenues, which used to be, oil and gas revenues, which used to be around half and even slightly more of the total federal budget revenues 5–6 years ago, has fallen when the oil price fell to around 33–35% of GDP. Now, given that this year the oil price was significantly higher on average, again, the share of the oil and gas revenues, probably by year end it will be staying around 45% of total revenues. But what's most important, that non-oil revenues, they grow steadily and deliver even faster growth, may deliver faster growth next year than this year. So meaning that next year we'll also have the budget in surplus. Agriculture last year, I mean not this year, but 2017, it was one of the best performance. This year we'll have rather solid growth in manufacturing. The ruble weakened, and it opened some room for expansion for a number of companies, and exports growth as well. Not only oil, but the non-oil part of the manufacturing exports. Services, yes, they're growing, but it's a recovery on the retail side compared to previous years of sluggish growth and earlier contraction. But responding to growth in consumer demand, which to some extent was fueled by consumer lending after several years of stability or sort of no growth at all. Since mid-2017 we see very stable, not very fast, but very stable expansion of consumer lending, which supports consumption in general, and that's translated into stronger manufacturing growth. Russian producers became more competitive on the local market, at least given the more reasonable, more stable rate of the currency. No, I think that there are several segments of the economic policy which we have to consider. First of all, on the fiscal side, the Russian government became very conservative already long ago, before the oil shock in late 2014, 15, and 2016. And that's what has helped the economy to avoid major contraction, despite quite significant drop in the oil price, which fell well below $30 per barrel at some point. So fiscal policy remains very consistent. It's very conservative. That's why we are talking about surplus budget, very low government debt. On the monetary side, yes, there have been some change, and we have seen a lot of instability on the FX market. The ruble was very volatile and very sensitive to the oil price until 2015, and that was the tipping point for the central bank monetary policy, which was extremely loose years ago. Now Russia's monetary policy is very tight, and that's what reduced the dependence on the ruble on the oil price. And clearly we don't see any fiscal, as I said, fiscal loosening. And at the same time, we believe that the monetary policy will soften, but only slightly going forward after we pass through this period of expected short-term acceleration of inflation. I think the central bank will be in the position to slightly cut the rate. Yeah, no way for the central bank to intervene on the FX market. It's their policy since 2015. There are no longer interventions. There have been some purchases of the FX, but not by the central bank, by the Ministry of Finance. There is fiscal rule, which was introduced again some time ago. And according to this rule, the Ministry of Finance is supposed to buy FX when they have spare cash. But technically, it's the central bank which buys this FX. So we have to make a distinction. It's not, even though it's done by the central bank, it's the order from the Ministry of Finance. And in theory, we can imagine a situation when the Ministry of Finance, if the budget, for example, turns into deficit, they can deplete the reserve fund to support spending. That's it, but not the central bank.
Of course, yes, but we need to understand that sanctions is the reality, is the new reality, and of course market is pricing in the relatively high probability of new sanctions to be applied to Russia. Nevertheless, I would not say that here we are talking about some kind of the massive damage which may be bring by new round of sanctions to Russian assets, because on the one hand, as you know, so from the fundamental point of view, Russian economy is strong, and also the financial position of Russian government and the bulk of Russian corporations is also very strong. So, and there is no problem to repay the almost 100% of its debt on time and in full. The problem is that anticipation of sanctions usually provokes some kind of the volatility, and here we're near the entry to the new year. So, and as you know, the new Congress in US likely to start to discuss potential sanctions somewhere in January, and of course it may add some kind of the negative anticipation, negative rumors, which are likely to be transformed into volatility of assets. But one more time, market is preparing for that, so it's not which is something completely new.
Yeah, maybe to add here, we have to remember that since the revolution 100 years ago, Russia was always under sanctions. So 100 years of solitude for Russia, it's not something for the economy. I don't mean market, but the economy got used to some restrictions from other countries, and it's adaptable enough, in my view. So that's why, despite very strong sanctions, the economy is still afloat and growing. Not a great rate, but it's growing.
I would say that investors are pretty much comfortable with the Russian budget, with the fiscal situation. They don't see any material credit risk in Russian assets. However, as I mentioned before, so the potential sanctions are pricing in, and of course, investors are afraid of some kind of a negative development of situation, but likely next year.
Actually, we anticipated some weakening of the ruble since not only because of the sanctions, but when the ruble was in summer around 58 rubles per dollar, that didn't seem sustainable to us. So the ruble is being affected by a number of factors, short term, such as all those expectations, also in the medium term, and also monetary policy situation with liquidity. Medium term, I would say the current account also matters even more. But longer term, we have to take into account more general factors such as economic growth, inflation. And when we talk about exchange rate, we speak about nominal exchange rate. We don't have to forget that in the past years, Russia's inflation was much higher than the dollar inflation or the euro inflation. So some adjustment of the ruble was inevitable. Some adjustment to inflation of the nominal exchange rate. So some weakening of the ruble, it's natural. On the other hand, we also need to take into account economic growth, which we discussed. It's not great, and there have been a couple of recessions, minor recession, but in the past 10 years, economic growth averaged around 1%. It's well below the global economy. And can the currency, the ruble in particular, appreciate in real terms if there is no growth, or if growth is well behind the global growth? Clearly not. That's why we need to take into account this factor. That's why instead of the range 55-60 rubles per dollar, as was dominated in midsummer, we thought it should have been much weaker, and the range 65-70 looked more sustainable. That's more or less in line with a long-term equilibrium for the currency. And that's what has helped the economy, I think, in the recent months to deliver better results on manufacturing side, on the tradable sector. So some weakening of the ruble really helped in October in particular to boost manufacturing in the country. And another maybe also interesting point is that the Russian central bank maybe not fully in control of the situation on money markets, because we have the finance ministry with their own interventions of when they buy FX, when they top up their international reserves. It means that they intervene on the money markets as well, injecting liquidity into the system. And there was a number of observations which we made in the past weeks and months, that the central bank's key policy rate doesn't drive the interbank market rate. It's the opposite. It's the interbank market rate which drives the decision of the central bank. It's very clear, 1-2 months lag, that's what we have seen. And that's probably will help us to understand what the central bank will do in the next months, looking at what happens on a daily basis on the money markets, given that there are many interventions from various sides.
Another thing which looks more or less obvious is the fact that the projected amount of the borrowings and the amount of the issuance of local currency debt from the side of the Russian finance ministry for the next year is something which is almost impossible to conduct, because if you look at the figures according to the budget rule and projected oil price, Russian authorities plan to issue local currency debt, so-called OFZs, in the amount of 2.5 trillion of rubles. But year to date, this year, the gross issuance is slightly higher than 1 trillion of rubles. And of course, given the overall situation on the markets, some kind of the uncertainty with the central bank key rate, some uncertainty with the sanctions, we can hardly imagine that the overall demand on the ruble government debt next year will increase by 2 times. So hence, for us, it's more or less obvious that the borrowing program will be revised somehow in the first half of the next year. It's a revision of the budget. So from the financing point of view, it's not a problem because budget is in Russia is running surplus, so the borrowing program can be easily revised and cut. So it's not the case. So from the technical point of view, it's like change of the law.
No, even the budget assumes the upper limit for the borrowing. So if the budget is in surplus, it doesn't stipulate that you have to borrow that much. And it's impossible given that the size of the market, which is relatively small, and it's very sensitive to excessive borrowing or various interventions.
Not really.
Very limited.
Because I would say that since the middle of this year, the bulk of demand on ruble debt is coming from Russia, but not from abroad. So hence, we are talking about investors which natural currency is ruble.
Maybe a bit contrary to conventional wisdom, is that we don't think that the fiscal rule which was introduced, it's a stabilizing mechanism. That's what the government was, the statement from the government they were making in the past, saying that we'll try to manage the exchange with the real exchange rate by intervening on the market to reduce volatility. We think it's exactly the opposite effect, because we have seen that if we are talking about the rule, it should be applicable all the time. But we have seen that in September they made a decision to postpone purchasing of the FX on the market, even though technically the Ministry of Finance was buying the FX from the central bank. There was no impact on money markets. And the conclusion which we came to is that the fiscal rule, which is a rather simple, I would say, linear formula, which tries to approximate all the non-linearities which we observe around the world, in the world and the economy, it cannot work indefinitely. It can work only under some conditions and during some limited time frame. And the conclusion we came to is that fiscal rule works quite well only when the government has a surplus. When the government budget turns into deficit, like it normally happens in November and mostly December, it cannot work. And that's one of the explanations. It's not only expectation of sanctions, it's another explanation why it was postponed. The purchases of the FX were postponed. So it means that it's not a rule. And when the government has a sort of very arbitrary approach to this, this time, yes, we'll start buying FX, then we'll stop buying FX, it creates additional uncertainty, not stability. No, we don't think that it's possible to have explicit target. And also when explicit target, we should specify which day, whether it's possible or not. We don't know what's going to happen with the oil price. That's why I mentioned the more stable range for the currency, more equilibrium, at which the economy can operate more or less sustainable basis. Oh, for the central bank, the ruble exchange rate doesn't matter. That's clear. Clearly, there is a preference, but it's not a pressure on the markets from the Ministry of Finance. They would like to have a bit weaker ruble because it's more revenues. But again, that depends on the oil price. But they will not do much in order to artificially weaken the ruble. They cannot do that. I think it's more or less, I would say even to a great extent, the exchange rate is defined by the market forces, including, of course, taking into account what happens with liquidity, the rates and flows in or out. It's a market